Hello, hello, hello. Okay, perfect. Just wanted to make sure that I was on. Okay. So welcome back everyone to a brand new week. I'm so excited to see what kind of opportunities lie ahead for us, for people who are in the markets involved with stuff. So I just want to show you guys today the things that have been going on for the week. There we go. Okay. So let's see here. So on Forex Factor, we have a couple of things going on. Big things going on, especially for midday Wednesday and Thursday. So we have a couple of red folder pins on Thursday. We have FOMC on Wednesday. So we have to be very careful with that. Um, so yeah, just have to be very careful coming up on Wednesday. So lots of my trading will have to be probably done either today or tomorrow AM session, the latest, because tomorrow by PM, I think we're gonna start seeing some sloppy price action in in order to get prepared for Wednesday. Uh, maybe even up to Wednesday AM if I can really read the price. Then I'll stop, by Wednesday in the morning. Cannot let it do its thing in the morning and then come back right on the PM a little after FOMC ends. But then Thursday we got unemployment, so that's gonna be very exciting. We'll see what's gonna happen, but I am feeling pretty bullish. You'll see that we're actually stuck in a buy program here. So from this low to this high, from this low to this high, we are essentially in a buyer's program right now. We're close to all-time highs. We opened up last weekend on Sunday, creating all-time highs for the NQ and stock market. So, hooray for that! Right for your 401ks. Now it seems to be retracing down a bit. Um, I do think that's just scare weak longs. If we go to the electronic trading hours opening range gap, I think it's no, not this one. Where are you? Where are you? I keep you here. Yep. You see, look at how we've been behaving on the on MNQ NQ futures. See that we created this open price traded back down to consequent encouragement, and look at how the bodies are supporting price there in that area, along with the wicks too. Look at that wick, perfect. You'll see that the consequent encouragement comes at 23.486. The low of this candle comes at 23.486.25. So a tick, just by a tick above. It's pretty accurate, guys. So I think this is a sign of support. Whereas we open up into a premium range, so it just needs to trade back down to consequent encouragement just a little bit before it continues up to go further. In terms of what's being left behind, so you see that this has been acting as support as well. We dipped that into pre-market, so said liquidity. Um, let's see here. So I'm still just looking for that SMT divergence. If we're gonna keep going up higher, I would like to see a low get traded to, about a low not traded to in the other one of the indices. We'll measure that. We'll measure that tap liquidity from this leg down to the B leg down here. See if it can close above 25% and send it rallying up higher. Friday, I just want to make a quick revision of what was occurring Friday. Friday we had like um, a funny little short-term sell-side delivery program. I didn't see it back then in the live stream, but when I was reviewing my trades on Saturday, I realized that we did enter a small sell-side delivery program up here. Okay, so we were looking for it to trade back down, and there was a trade that occurred back here around London session, trading back down all the way to New York, London. You could have traded another SMT low here, would have converted us into a buy program, and then seeing how these highs got tapped on the way up, like the pre-market highs, London buys had liquidity, even to 12 a.m. What I was having issues was here. You saw in the live stream, it was kind of very difficult to kind of distinguish prices and trying to figure out where it was trying to go. We did get a small minor sell side delivery program as soon as it tapped. I believe it was London buy side liquidity. So I thought that we were going to have this rally up to head back down lower for deeper prices in order to continue up going higher, but that wasn't the case. These signs showing of support here. We weren't closing below like the order block. Um, old lows. They were kind of just being kept like protected, and then slowly but surely we ended up getting to the drawn liquidity, which was the 12 a.m. buy side liquidity, and ultimately Thursday's highs. See that expanded greatly, and we retraced back down, leaving behind more buy side liquidity. So something that's interesting that happened over the weekend is that we left behind these buy side liquidities from Friday, but you see we gapped through it on Sunday. So I'm going to keep this on as untapped for the time being, because technically speaking there was no trading involved in that area. So because there was no trading done in that area, the price really technically didn't go through that area just yet. So I'm going to keep that as reference for now and kind of use that as an old high to see if that will be used for support. Look at this beauty. So let's see here. I just want to make sure that my charts here are. Here we go. Can we use this Friday buy side liquidity? Trading back down. Okay, one other thing I want to see here too is the reaction of 30 here. Okay, that's just an indicator. Oh, it's pinned. Okay, so that's what we mean by pinned. Let's make a note. Okay, flag. You can barely see it up there. The point is that I'm going to be using this flag as an indication that that's going to be our first A leg, retracing down into this buy program. So all the old lows, that's an old high. But this low down here too would be interesting because that's all that was left behind from yesterday's close, from yesterday. It's kind of like, think of it as like unfinished business, and price might be drawing into that level as well first before we can continue seeing prices go up higher. Because think of it, right? If we're in a buy program, you want to buy when it's the cheapest, right? When it's a really deep discount, right? Do you want to buy uh, do you want to buy a gift when it's 40% off or 80% off? Obviously, you want to go in with the higher discount, right? So right now the highest discount are these lows, and so that's anchored inside from this low to this highest buy program. So if we can get down to this low, let them close lows, because that's again unfinished business. Let me see if I see any other lows here that could be on the way. Okay, hold up. Close those. There we go. That's the one I missed. I missed London lunch. Okay. So again, you wanna buy things for it at a deep discount, no? So right now these are the levels that I'm interested in, particularly these two. I don't know about this high. This is kind of new to me because it's not high. So I'm wondering how we will react off that level as well. So if we're trying to get into discount, then we must be in a short term sell program, right? But notice there really hasn't been any SMT to prove that. See that all the highs have been broken up to. If there was a high that wasn't taken, but the other one was, then I would consider a short-term sell program. But that's not what I'm seeing right now. So my thing is right now it's just wait. But if we are gonna garnish more sell stops first before we can go up higher, we can look and see on the lower time frames to see what kind of structures is in place that we can trade accordingly. So it is currently 9:20 right now. So I like to refer back to the 7 o'clock. Okay. So this is what I currently see. Okay. So we had this dealing range here. This low that was taking, the highs that were taking up here. As soon as price retraced down here, we've disrespected its A leg, its foundation leg. So I am not going to expand this dealing range. Instead, I'm be interested in seeing as it creates lower lows, how it retraces back up to these levels. And it hasn't, right? If it hasn't retraced back up to these levels, there's a sign that this could possibly mean speed. They're in a hurry. Smart money is in a hurry to get somewhere. Where we have the sell side liquidity resting from Friday's lunch. that could be a potential target. Remember, we're looking to form that B-like, and there's no other business left that was left behind except these lows. So, if that's the case, I'm looking for any. If I'm going to be shorting this, it's going to be like a short-term scalp. Let's see here. See that this area from this high to this low, from this low to this high, this little zone right here has been balanced. So when price traded through it and closed down below it, that's a sign that it could probably mean that it's going to be treated as an inverse, right? Especially because we're looking for sell side to get triggered. If that's the case, look at the next candle. Opened, created a high, and immediately sold off, leaving this breakaway gap, right? So I'm not anticipating this imbalance to get triggered back again as it's going down. Interested here now, actually. Oh, interesting. As well as we also have this dealing range, right? That we anticipated getting filled by 9:30 to get up there. I don't think we're gonna head up there. So what I'm pretty much doing is looking into the charts, seeing the short time frame structure in place, and seeing how we can use that as support or evidence that the price will be heading into our predicted direction. So in this case, for example, we're predicting the price will be going down lower first to create that SMT. So right now we're looking at the structure in place to see if there's any form of evidence that price should be able to go down lower. For example, if it's I don't know, 903, 904, right? And we see this in place, and then by 905 we see this close. If we're looking for sell side delivery, we can use this balanced price action, balanced price range, for it to trigger a limit, a sell limit, or a sell stop, whichever you prefer, to take it back up here, keep shorting it lower. So that's where I think we're going to be going. See that we keep taking down to create lower lows. And again, we have 10 a.m. JOLTS jobs openings, red folder news. So let's mark that down for our, let's see here, make this red. Okay. One thing I also like to look at if things are getting unclear is comparing the CFDs with the futures contract. Usually you sometimes see a divergence in play. You can sometimes see a divergence in play. Excuse me. And again, if I'm going to be selling something like this, I would like to sell when it's still a premium. And if this was the old me, I will be trading everything I see here. Meaning that I will take everything at face value. If I see the structure showing a bullish direction, I would have disrespected my higher time frame insight and just trade what I see here. And a bunch of times, that's what usually caused a lot of my burnt accounts too, was the fact that I was getting into everything, every little price fluctuation, and not keeping in mind the higher time frame perspective. That's something that is still a struggle for me sometimes because I get so tempted to just want to go in there and just start wrecking stuff, you know. Of course, over time you start getting a better grasp about yourself, grasp about what it is that you should be looking for, and you kind of start getting certain ideas, especially when you're trying to have higher time frame objectives. You sometimes see that price creates structure to fool people, thinking that it's going to be a bullish price action. But if you have a direction of where it wants to go, then that bullish direction you can use that as an inverse and trade that towards the direction that you were going for initially. Which is what I mean. It's perfect because if you're trying to see sell side and you see a bullish price action, just take the inverse of that. As soon as it closes below that range, take the sell right there and see if it will get down to your profit objective. But I wasn't seeing that before, and that took me months of just reanalyzing, backtesting, seeing how price behaves again, and not easy. You know what I am also interested in seeing is the possibility of seeing price react up to here, okay, and using that to head down low. But to do that, check it out. So this is going to be our A leg to see if price is willing to head down to lower prices. One second. Where did I see you? So we have old highs, right? Unfinished business. Again, up here, up in these old highs. So if we could use these highs to get an S&T divergence into a mini sell-side delivery program, we can see price close below 25% and take that lower to get that into a lower discount. So imagine if you anticipate a higher push upwards, right? For the sole purpose of getting into buy-side liquidity to garner more shorts, right? Fake out those weak shorts because there's a bunch of sell stops up here too. So if you can fake those people out and trick those, thinking that it's going to go up higher, you'll take out the weak shorts, you'll take their seat, and essentially you can ride it for much more lower prices, garnering you more profit, right, on the short side. It's just something that I just noticed too that could possibly occur. Let's see here, give me one moment because now we got new structure in place. Okay, we got another type 2 dealing range right here. Okay, and then here, what do we have here? Now, normally, when something like this occurs, I would like to see it. I would have liked to see it take a turtle soup entry on the high here to head things down lower, right? Let's see here. Right. That's an interesting reaction on the open flow of this. Hang on.
Order filled.
That's a very interesting reaction that we had up into this high. Why is it an interesting reaction? Because if we're looking for lower prices, we could use the open flout made from this range. From let's see here. I was looking at this high to this low, right? And because we are in search of lower prices, this high could have been used for turtle soup to get down lower. But you know what it is? The climate. And let me write this down so that I don't forget. Higher time frame. We're still in a buy side delivery program. So I'm interested in seeing these highs here get swept. for the purpose of turtle soup to see if that will take us down lower. So I think I know that's what's going to happen. If I need you to guys see a chart here, this is what I think is going to occur. We're going to make a fake rally up, thinking it's going to be another bullish day, supporting the idea that we're in a buy program, right? Despite the fact that we haven't made an SMT low, so there's no cracking correlation yet. So I believe smart money is still looking for a cheaper discount so that you can get into to accumulate more longs. If that's to occur, right? Right on the sell side delivery curve right now, there is no unfinished business that we have tapped to. The only one that I'm seeing right now is the lunch from Friday. So I'm anticipating it to reach up to this buy side delivery, right? And if we get SMT here, that will initiate a sell side delivery program. Once we close down 25% of it, we can retrace back up to that 25% and sell. Sell down here to Friday lunch sell side liquidity. Why does that need to occur? Because there's a lot of sell stops up in this as well. There's a lot of stops around this area in the form of buy side liquidity. So you can fake both the breakout artists who are thinking that it's going to break up to this high and keep going long, and you can take out the weak shorts who are anticipating their highs here to be protected. You can take both of them out, trade it up to this level, break down through it, make them think it's going to keep going higher, or like a little fake push, and then keep selling down lower. Okay. So you can take out two parties at once with that kind of price movement. And again, but for right now, until that happens, we are still in a buy program. There still had yet to be any form of crack correlation. Let's take a look at what I was trying to show you guys earlier as well. Notice the PM buy side delivery, buy side liquidity. It rests on that lower quadrant of the opening range gap, electronic. You could also be looking at your trade down to its low, this gap. Sorry for the busyness right now. Just gonna adjust my skills here and see what would have happened if I was a little greedy and and wanted to get into everything. So right now I'm seeing this as an excuse to go up higher. But we'll see, man. Because we have a type 2 dealing range, high to low. Now, I'm not gonna lie to you, this would have been actually kind of scary, seeing how we could have used this high to low, right? If you had entered the first leg and now seeing it dip down into your entry again, would you have been scared to hold that price again? We're holding this idea until 10 o'clock, but I think I would want to get out a little early because of the fact that we're gonna have the Jolts news occurring soon, so to be very careful with that. Okay, also notice that if we're looking for a short-term um, buy-side delivery action, notice that this premium array can now be used as a discount array. And look at the low, the wick, and how it reacts to this low here. Right after 9:30, it's been just wicking there. But look at the bodies. Bodies show support. Bodies tell the story. Wicks do the damage. So I'm still interested in seeing this reach up here. So in this trade, you're risking 15 handles to make 41 handles. Okay, not bad. And now you're just holding onto the idea until 10 o'clock. But let's set an alarm here. Let's clone this. Let's give it to 55. Maybe get out just a little early now. Put there you go. That's a little too slow. Just need one then. Okay. What is this for? This is just an indication to remind you that to kill the trade. If it's above our entry price, set it to break even. If it's not above our entry price, just kill the trade. If we're like down here. I'm still playing the idea that this is a type 2 dealing range, so we can anticipate a quick reversal. And it supports the higher time frame idea that we're in a buy side delivery program, right? Even though we haven't encountered S&T lows yet, I still would want to see this idea play out so that it can reach up to these highs. Now, as it's going to hit that, I'd be interested in seeing SMT. So look at the US 500, how it's not going to act, right? If we can get up to these highs, right, and S&P 500 doesn't get those highs tapped, but we do see it in NQ, that would be a strong S&T sentiment for me. Okay. So notice how we closed above the 75%. Now is when you would want to set that to break even. Just a little bit above it. Say you have commissions, and see if it will want to run up to those highs of the type 2 dealing range. And we closed above 75%, so we don't anticipate it trading back down to equilibrium if it's going to go up higher. Also, notice what kind of idea I'm trying to see pan out. What is this called? Low high, lower high, expansion lower. What's that? That's a failure swing, no? Interesting. I almost forgot to update my markings again. But what are we seeing now? We're seeing a small little dealing range forming. Mind the busyness here. But as it's going up here, right? The moment it opened up at 9:30 and made this new high, I would like to see it retrace down to 75% or equilibrium before it can start continuing its expansion up higher. There have been some times where it does expand down to 25% and then it goes up, it continues that direction. I wouldn't want to see that occur because, of course, our entry lies down there, just around that area. Okay, so we're looking at this buy side inefficiency, a busy, right? We're looking at this busy. It's a buy side imbalance, sell side inefficiency. So as price traded down to it, it was sell side efficient. Now it just needs to trade back up so that it can be buy side balanced. So that this fair value gap can be balanced. And if a fair value gap gets balanced, this is an intermediate low. But now that we've opened at 9 o'clock, where is our first percentage fair value gap? Oh shoot. I think it just so happens to be this one. This is our first percentage fair value gap. Are you enjoying today, by the way? Are you enjoying today's live stream? I hope I earned a like or something. I just noticed I have the incorrect title on my live stream. Shoot. wonder if there's a way you can edit the titles on your YouTube channel. But we are looking for this high to get filled. I'm not gonna lie to you, that was a little scary of a retracement. Seeing that just once right here, like seeing it not once go against you, but seeing it twice kind of go against you almost. Okay, so it's 9:55, right? Let's cancel a portion of it. Let's cancel 6. Partially close that, and then see if we can get the rest of it to go higher. Check this out though. Let's see here. No tap on the highs just yet. Let's see here. 20 flat. Okay, we're seeing if it'll reach up there. Remember, we also have 10 o'clock news, so I will be very, very careful. That's why I'm just leaving these last four run. Also trying to recover a negative account, seeing if that will help out. Just challenging myself, you know? Seeing if I can help myself recover. Get ready for some fireworks at 10 o'clock. We're also in that 950 macro, so I'm interested in seeing how that will deliver price up to that external range liquidity that are resting above these highs. Will we get up there? This is not fun holding it. I'm not, I'm gonna be honest. This would have not been fun. Like seeing it get tapped one, two, now it's going for the third time. Like, is it gonna get tapped pretty please? 30 seconds. I'm gonna set my stop loss up to equilibrium. So notice that majority, more than half of my position is already locked in. 10 o'clock, y'all. Here it is. Alright, we close down. Cool beans. So what are we seeing now? Alright, let's see here. So you saw that idea pan out. It's a little hard to hold, I'm not gonna lie to you, but you saw it hold nonetheless. Okay. Sorry, I got a little bit distracted. So now we have a dealing range bullish. But will it behave as such? Let's see. And then, so I'm gonna delete this because you guys saw it live on the stream. Let me not delete this and let me instead hide it. The 15 minutes. So, if you just joined the stream again, welcome. I just want to say that I was looking for a sell side delivery. No, I'm sorry, yeah, a sell side liquidity pool to get tapped, aiming for Friday's lunch sell side liquidity. But the way I was looking for that to occur was for us to have a B leg attached up, anchored up to the highs of the CME Open. So we see here that the highs were tapped here on the high of CME for NQ or US 100, but not for the other indices. And I'm using the CFDs to help me get the real-time price action data because yeah, I don't have the futures live on me right now to show you. I only have the CFDs to refer back to. That's why I'm using these to just read price. And right now what we're looking is for our B leg to get attached. Those are these fibs that you see up here. These fibs. They're getting attached to the high as it's expanding up higher. But the moment we have SMT, which we do currently, and we close below 25% of this thinking range, that can be a valid low to take. Okay, so that's what we're currently trying to look for right now. I also want you to notice the buy side idea of where did it occur. So we see that we're in this higher time frame buy side delivery program. If you look at the low to high and look at the 75%, you divide this quadrant from this high to this low by half of it. This half equilibrium down low is still a discount. So when price dipped down below here, look at what ended up happening. Not only were we in a discount, but also we were looking for a buy, buy side delivery to occur, and it did. So that's interesting to take note of as well. So something that's I noticed was that as soon as we had tapped up to this highs from our CME Open, that first high that was tapped should have been our S&T leg to head down lower. It wasn't closing below 25% and instead made a second leg higher. That's kind of making me a little concerned if this is going to be an actual high that we're going to react from to get down to lower prices. So it's kind of making me self-doubt here. Because I haven't, not that I haven't seen something like this before, but just something to take note of. Like, why is it dipping twice to get up there, you know? If I want to take a short. So update our markings. So something again that I don't feel confident about, didn't like about it, is the fact that we traded up to the first leg, didn't get our entry, but instead got it on our second leg. I don't like when it double dips like that. But we're still looking to see if it will trade down lower to these levels, to Friday lunch sell side liquidity. I'm interested in seeing how this breaker will be used to get down lower, if ever. 'I wonder if the market is using high resistance liquidity run conditions today. Let's take a look at the regular trading hours, and then look at that. Strengthens, ORs, not ORs, this one, where are you? .45 handles. Could say. Very interesting wick that happened here at 9:48. I'm sorry, not 9:48, 10:11. I'm sorry, this is 10 minutes behind, so it's 2 o'clock. Yeah, very interesting reaction there. And again, something I don't feel comfortable about is the fact that we double dipped into these highs. But why did we have to do that if at 10 a.m. we had already dipped onto these highs, which is relevant to the 60U and this old CME high? Why did we have to dip back up again? Kind of fake these shorts, thinking they're going to expand lower. Notice the expansion lower after 1015. Breaker. Went back up again. Is it going to get to its medium threshold? It didn't this time. But I was feeling a little unconfident about seeing a double dip like that. Initially, I would have liked to see the first leg BR or B leg, but then it went up again. Mm-mm. Usually, when that kind of stuff happens, when there's SMT, right, and then it dips again, that's usually a sign for a continuation for the uptrend, right? Something like this to continue. And what I usually tend to see is that price uses this as a manipulation down lower to get into deep discount to give us like a retracement before it ends up going up higher. So this is beginning to worry me, this idea that we had earlier that's going to get down to lower prices. But I'm still holding this position anyways, just to see what happens. Let's see here, it's already about to be 10:29. So I'm actually going to be reconsidering my position here just to protect myself since I am trying to recover this. And so about to be what, 10:30, right? So at 10:30, we got this going on. This is the biz. We have another breaker here. Okay, bearish breaker, and then we're gonna have this, which is a low high type 2 dealing range. So we can anticipate a reversal. And from this high to this low, we can take our quadrants. We'll make this up higher now. Okay, think of it like that. From this high to this low is our 15U dealing range to go up. So I could probably retrace back down to 25% before it goes up higher. So it's 10:31 now. We have a mini macro in play. See what happens. I'm not gonna lie, it's very, very hard conditions today, making me question a bunch of things today. These are things that you want to take note of, right? Like, it's not just about how you're feeling intraday or when you're seeing price action live, but rather, the certain behaviors that price does when it reaches to a certain level. How is it behaving around those levels? I'm seeing both reasons for it to go up and down. So does that mean it's high probability? Nope. I'm not seeing. I'm seeing a reason to go down lower, and that's what it was as we were saying since the morning that we want to get down to the sell side liquidity. But in order to do that, we got to first get ourselves into a minor sell side delivery program. We suspected that the highs of the CME Open were going to be the inception of that leg lower, but the fact that we went up there again and we caused this little quick retracement now from this low to this high, we retraced down to deep, deep discount, and now we're hovering about the breaker area that we had here that was balanced. Um, that's kind of what's negating that idea. But then there's also the idea of it going bullish as well, because whenever we have a second stage SMT, what I like to call second stage, is the reaction that occurred after the reaction of the suspected highs. So once we had this high to this higher high, that's the first stage SMT that we were anticipating would be the inception for lower prices. But the fact that we went up there again meant that this is our second stage SMT from this high to this higher high. So when that usually happens, I usually tend to see a retracement down to a deeper discount before a continuous going up higher in this case. So that's why I see two possibilities of it going both down and up. And now look at how it's behaving around this area. Call that consolidation, call that high resistance, call that time distortion. But right now it's really, really risky. So you'll see that I had a short position that's still embedded in the first idea that we had, but now I've decreased the take profit because of what I've been seeing in the charts lately. If it breaks me up to break even, that's fine. If it breaks me up to profit, that's fine. I'm just not expecting it to move either or, right? Unless we see this not distortion, a displacement for institutional sponsorship to sponsor move, right? Because again, it's also to think about it. If we're gonna continue going up higher, We have this type 2 dealing range from this high to this low. Was to stop it from reaching down to 25% again, right? Because it's high resistance, and then for it to continue up going higher. You could go either or, man. Now, there's this concept that's going out there about time cycles, and how about every 90 days we're going to see a new function perform. I haven't looked much into it in terms of accumulation, manipulation, distribution. Like every 90 minutes, we'll see a function perform, whether it be first 90 minutes will be, for example, accumulation. The next 90 minutes will be manipulation. Third 90-minute cycle will be distribution. But that whole part, that whole 90 times 270-minute uh, composition would be a higher time frame manipulation or a higher time frame consolidation. So, I mean, I haven't looked into it that much to say, but I mean, I guess I can see the general idea of it. So we'll see that once 10 o'clock hit was the end or the close of a 90-minute cycle. So we broke out of that external range liquidity. So if we're going to keep going higher, it can either treat the high of that external range as support to continue up going higher as well, or it can purge and revert, meaning it'll just trigger the buy stops that are resting up here, only for it to sell down, down, down quickly. But we're not seeing that right now, are we? Hmm? Look at that. So I think I see where we're trying to go now. And we dip back down into equilibrium. So notice that as well. And we're trying to reach above these highs here for external range liquidity. I don't see any other buy side liquidity that would be for leftover, that was left over for us to take. Maybe, oh, okay, London lunch. So that will be our next potential leg that we can see price head up to. Everything else seems to be in balance. Let me double check here. Not yet. Let's see here. It's what high is this? 510. The high is 23,399, and then the high here is 2398. So if we're gonna see lower prices, I would like to see the A leg be stable here and our B leg to react as such to get into a short-term sell-side delivery program for smart money to accumulate more shorts so you can sell down lower down to these levels, which is a deeper discount, right? Inside of this higher time frame buy program. That's kind of like what I'm aiming for, what I'm anticipating and seeing in the market. Uh, if we are going to keep going up higher, this would be the high that I would be aiming towards. So let's cut this slack and do this instead. $10.44. I mean, this gets me really excited to see, guys. I don't know. Am I the only one having fun? It's nice to see the charts today. I don't know. I feel really blessed to be able to sit down and watch this unfold. No need to worry because this type 2 dealing range can still take effect until 11 o'clock. This is the bearish breaker. Okay. What are we seeing here? Type 2 dealing range. Okay, did it head out to external range? No. Okay, no problem. So now we'll take a look at this range now. We have a high to low, higher low, higher high. What is that? Okay, aim 75%, buy. Stop loss just below the low here, and take profit up to here. That's good, that's good. I noticed that the equilibrium of this dealing range is attached just above the lower quadrant of this block going upwards. So that's a really good sign, at least for me. If I was looking for this mitigation block to be treated as a discount array, which we are, we're gonna test it out. Again, this is just demo trade, so I would like to see just getting to trades, up and down, up and down, up and down. See if we can get what we're looking for here. We also have this higher time frame bearish, and this higher time frame high to low. And you'll see that we're triggered now. and see if we can aim up to these prices going up. Why? Because this area from this high to this low and this low to this high is balanced. Really challenging day, no? And again, this is just my demo account, so I'm just getting in and out in everything that I see. It stops me out, you know? You know what I wish? I had my pen nearby, because there's a couple of things I want to take a note of. Okay, so we got stopped out there. What's another entry idea that you have? Once it closes below the low of this, you can treat this as a premium array. I like how these breaker, higher time frame, and this little block that now will be a premium array. They're kind of stacked together. I like seeing that. Let's see what happens if you go short here. Okay, let's not see a retrace up to equal, medium threshold. Let's see it just have like an immediate reaction down lower. Now that we're in the macro, 1052, 1110 macro, but doesn't this area count as balanced, right? Low buy side delivery. So I think that there's that habit again, just wanting to get into everything, right? Instead of considering the higher time frame goal up here. If this area is balanced, well, you know what? Let me close this out right now. Wouldn't this be an interesting area to go for a long? Let's do upper quadrant. It's fun to push buttons today, you know? I guess today is what I'm trying to show you is you see how when you're getting involved in very high not probability conditions, everything just feels like a good reason to buy or sell. And when you're doing that, you're not just exposing yourself to more risk, but you're also exposing yourself to blowing up an account. Look at that. Low, higher low, low, lower low. I don't know. That's something interesting, you know? Little SMT on a balanced price range. We'll see if that's an excuse for it to go up higher. Instead of this higher time frame buy side delivery program where there's no SMT right now on the lows, so we're seeing if the structure in place can help us get into higher prices to go up to buy side liquidity. To create a short term sell side delivery program. We're also inside that 1050 macro. Oh wait, I think I said that already. Whoops. Excuse me. Look at that swing low. Okay, as we're approaching the 11 o'clock hour, I want you guys to consider the new formation that we'll be having on price action, right? So we have the high to low, lower high, I'm sorry, higher high, higher low. So I see that as an unimplied mitigation block. So we'll take this high to this low. Okay. And we're gonna want to see quick expansion of price, just wanting to fill this this range. From the moment it opens up, we want it to fill quickly as possible to get up to these highs. Will we do it? Will we see it? I actually want to stay to see if we'll see that manifest. Oh, implied, not inferred. Implied. I don't know. I would call it inferred because like I'm anticipating for it to happen. Inferred. I don't even know how to spell it. Negation block or a failure swing. Because if we're making a low here, low, higher low, and we have yet to fill this to make this a bounce, as soon as 11 o'clock hits, I'm interested in seeing that quickly get filled. And again, we mentioned earlier that we're looking for reasons for price to reach up to this buy-side liquidity pool for it to form a miniature sell-side delivery program. So this high is suspect. Okay. What else? What else? What else? What else am I seeing? See, this is the kind of thing that I mean. Okay, we're also seeing this to get filled too quickly as possible, but I'm going with the higher time frame one. So I'm going with the higher time frame one. Same deal too. Once 11 o'clock hits, we want this to sell to fill quickly as possible, going down lower. But I favor the higher time frame one, which is this green block, my 60U, because it's higher time frame. We're in a higher time frame buy side program. You know, I do favor this one as well. Okay, and what we're also seeing a type 2 dealing range again. So I'm gonna take my markings up here. Remember, if we're gonna make that failure swing high to low, higher high, higher low, this is going to be our implied failure swing because this low did not tap this lower low here. I'm really favoring the buy side, but we'll see what happens, man. See, this is what I mean, mixed signals. If it stops me out here, then I think I'll be closing the stream, clapping, going at it. I think like 2 hours already. Gosh, it's a lot of time. Sometimes the thing about lower time frames is that you get a lot of signals, right? And if you don't know what kind of buy program or sell program we're in, it's gonna be a tough time. it's going to be a tough time because it's not your analysis is not correlated to the higher time frame. I would have been interested in buying more here, seeing if that would have been a catalyst to take price up higher. So we had an order block, order high, then we have another order block here. So this could be treated as a propulsion block to aim to higher prices. The thing about trades like these is that you don't want to see that much. Yeah, five handles, crazy scalps. When you're with NQ though, I do feel more comfy with 10 handles. So I'm wondering if that will be, the reason to go up higher. Draw liquidity up there. Let's give it till 12 o'clock for it to do its thing. Stinky price action, huh? Stinky. Are we seeing buy side get hit yet? All right, yeah. I think I'm gonna end it here. Close the stream. It is already 11 o'clock, and I got a couple of things to do today. So in respect to time, I think I'm gonna end it here. But looking to see this buy side liquidity pool get tapped. Let's see here. It's also 9. Hmm. I wonder if we're also behaving this way to generate more sell side interest as well. Okay, I do see this forming right now. This could also be a catalyst for us to perform that B leg high to low on these lows. Right, get that SMT, anchor our slingshot to go up higher as well. I still would like to see, however, a what you would call it, a minor sell side delivery this high to get down here first, so that we continue that buy program on the higher time frame. But things to watch out for are market symmetry, six sister, how prices have been using other these same reference points or pools of liquidity and seeing how they're behaving as well. Are they creating breakers? Or are they creating mitigation blocks, failure swings? Just kind of like that, and seeing if that has already been referred to. Because if it has been referred to on, on the Dow, for example, but it hasn't been referred to on the NQ, that's also really important, right? Because that also can make the NQ's high be a protected high or a draw on liquidity as well, or it can even act as to suit. So that's why this thing can get kind of complicated, because you're not just looking at one market, you're looking at how it's correlated with the other three. And if you add inter-market analysis to the mix, now there's even more things to consider as well: the dollar, bonds, interest, all that stuff. But all in all, just looking at this price action alone, it's crazy. And besides the 10 a.m. news that we had this morning, we're also getting in preparation for the what you would call it, the FOMC. And I just realized I made a mistake there, because Monday there's really no news. This was for Tuesday at 8 a.m. So jokes on me, huh? But anyways, anticipating the run up to higher prices. See how that's gonna get us. All right. So I hope you have a good one, and I'll send you a screenshot if it ends up going